Visa stock, ticker symbol V. A lot of people are talking about this stock as of lately, and it is also one of my favorite stocks. So let's see what all the hype is about. This stock is up 5.5% on the year-to-date chart, underperforming the SP500 slightly. And Visa beat on both the EPS and revenue. For the upcoming earnings, all analysts expect another beat. And people love Visa for many reasons, one of the things being the dividend. And it is not the 0.75% dividend yield, but the 16% growth rate and 15 consecutive years of dividend increases. And if we look at the past 5 years, we see that Visa underperformed the S&P 500 by a decent amount, which kinda surprised me. So could this be the perfect time to buy Visa stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Visa do? Visa is the largest payment processor in the world. And Visa operates in over 200 countries and processes transactions in over 160 currencies. Visa reported a revenue of 8.6 billion, up 9% year over year. And to be honest, this is pretty impressive already. Net income was reported at 4.9 billion or $2.39 per share. On top of that, Visa had a great shareholder return with 4.4 billion in share buybacks and dividends. The net income went up 17% year over year and EPS went up 20%, pretty impressive. Payment volume went up 8% and cross-border volume went up 16% excluding Europe. What I think is very interesting is the fact that expenses are down significantly. And because of that, operating income went up big time. For the upcoming quarter, Visa expects revenue growth to be in a range of upper mid to high single digit growth year over year. For the full year, they expect low double digit growth. Both are pretty impressive if you ask me. Expenses is expected to grow at low double digit numbers in the full year. And EPS is expected to grow in high teens in the upcoming quarter, but in low teens for the full year. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Visa is a 558 billion market cap company. PE ratio is at 31, indicating they could be at a premium price right now. Later in this video I will show you my 3 price targets for Visa stock, so make sure to watch until the end. Revenue is at 33 billion and in this graph we see that revenue went up in the long run. During lockdown periods, the revenue slowed down a bit. Most recently, it is growing again at pretty decent numbers. Margins are growing nice and steady over a longer period of time. To me, this looks really good. EPS is pretty much the same story as the margins and revenue. Nothing really special to add here. Analysts expect that EPS will increase in the coming years at a pretty high rate. We're looking at 40% growth in total for 4 years. For the revenue, analysts also expect some high growth with an average of 10% per year. To me, this looks really good as well. Return on assets is sitting at almost 20%, which is a great number. Return on equity looks really good, and the most important number, return on invested capital, is sitting at 25%, which is an insane number. It is also higher versus the 5-year average, which is a good sign. Current ratio is at 1.45, which is a great number. Nothing that really worries me a lot here. And right now Visa has 20.7 billion in debt. and I prefer companies that can pay down at least a big chunk of the total debt with the total cash. Visa has 18.6 billion in total cash, so they can pay down almost all of their debt. And to me, this looks really good. But it is still very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow went up in the long run. It is somewhat steady and consistent, and to me this looks pretty good. Shares outstanding are decreasing, which is something that I really like. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 0.75%, which is a low number of course. I would love to see a higher number here, but that is not what the excitement is all about. Annual payout is a little over $2 and payout ratio is at only 22%. I prefer 50% or lower, so right now they have 78% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at 16%, which is a great number. They have increased the dividends for 15 years in a row, which is also really impressive. And if you take a look at these numbers, the dividends paid since 2012, you see that Visa did increase the dividends at a high pace. During lockdown periods, they did increase the dividends at much lower rate, which makes sense of course. And payout ratio is a very important metric with dividends. It tells you if the dividends are safe. And here we see that historically it looked really good. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It is expected to grow at historical numbers. And overall these dividends look really good to me, but how about the historical returns? I decided to compare Visa stock with the overall market, in this case the S&P 500. Next to that I added MasterCard. On the 5-year chart we see that Visa was beaten by the S&P 500 with a small difference. MasterCard had the highest return with 100%. And keep in mind, this is including dividends. On the 1-year chart things look pretty different, since Visa underperformed both the S&P 500 and MasterCard with big numbers. On the 6-month chart we see that all three of them had nearly the same return with 15 to 90%. But again, Visa is sitting at the bottom of this list. On the 1-month chart, all three got a negative return. However, the S&P 500 is sitting at only -1%, while the other two are seeing lower returns. Bottom line, Visa was beaten by both the S&P 500 and MasterCard in the short run and in the long run. So could this be the perfect time to buy Visa stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 7, 9 and 11%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm putting in 53, 55 and 57%. For the free cash flow margin I'm putting in slightly higher numbers. For the PE ratio I'm putting in 20, 22.5 and 25. For the price to free cash flow I'm putting in the same numbers. Visa has a big moat in my opinion and is capable of growing at really high numbers. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now Visa stock is around $271. I hit analyze and we see a few green numbers. We have a low price target of $165 to $172. We have a mid price target of $216 to $224 and we have a high price target of $281 to $291. To me, the high price target is the most justified here, telling me that this stock is undervalued by a really small margin. Which price target do you think is most justified? Let me know in the comments down below. My final conclusion on Visa is that it is an amazing company. It is my favorite company out there, and with reason. They have a big mouth in my opinion, and most fundamentals are looking really good. They keep on growing in revenue, margins and free cash flow. This is a triangle that I really like. From a dividend point of view, things look really good. And yes, the dividend yield itself is really low, but Visa is buying back shares and the stock price itself is also increasing. So there are more ways of getting a profit on your investment here. From a value point of view, it might be a little difficult. I'm willing to pay a premium for the stock, since I really believe in the business. However, I wouldn't mind a small correction here to have a higher margin of safety. For now, I keep buying Visa stock in small amounts, and whenever the stock price drops significantly, I will buy bigger amounts. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.